Hello everyone, welcome to today's video. Hope you all are doing good. So what we'll cover in our session 2 for mutual fund series is classification of mutual fund, the basis of that classification and the subtypes therein. So to start with, we have four major classification of mutual funds. One is based on asset class, the other one is investment goal oriented, the next one is basis the structuring that we have of the mutual fund, and the last one is specialized mutual funds. So let's start. Based on the asset class, we have four major mutual fund types, that is equity fund, debt fund, money market fund, and hybrid fund. So these are the four major classifications that we have in asset driven equities, debt, money market, and hybrid. So let's go into detail one by one. So equity fund. Equity fund is the money pooled from various investors from diverse backgrounds into shares and stocks, and this is done by a fund manager. Definitely, equity stocks is the one that is the most volatile mutual fund category that we have. This is directly having exposure to the company's shares. We have various subcategories under the equity funds, and definitely we'll cover this in the later part of the series. The next one is debt fund. So debt fund basically is the mutual fund which invests in fixed income securities such as bond, securities, treasury bills. These debt-based mutual funds generally have fixed interest rate and a fixed maturity date. It has nowadays become a great source for passive income looked by regular investors. The next one is money market funds. Money market funds basically are the investments done in bonds, treasury bill, dated securities, certificates of deposits, and like such. The main difference is the short term, the tenure of these funds. So these are generally less than 13 months in the term of validity and maturity of these funds. The next one is the hybrid funds, or also known as balanced funds. So these basically are the optimum mix of bond, stocks, debt, and equity. This basically bridges the gap between equity and debt funds because see, in equity we get a very volatile nature of mutual fund, and in debt it's a very decent fixed percentage of return that we'll get. So this is actually a optimum mix that we have for debts and equity, and we get an average return of both equity and debt. So we are not too much exposed to the market, and we are neither only fixed income based investments. So these were the asset class based classification. The next comes basis on structure of funds. So how the mutual fund is structured basis that we have two sub bifurcations, that is one is open ended and the other one is closed ended. So open ended mutual funds क्या होता है? These basically are the funds in which we don't have any constraint as to when we can enter and when we can exit. ठीक है? If I want, I can enter that mutual fund, I can buy those mutual fund today and I can exit it tomorrow, subject to the exit loads that we have. But these are really open. You can go anytime and you can come out anytime from that investment. Whereas closed में क्या होता है? It has a fixed time period that is there for that fund. That is, you can subscribe for that fund during NFO. So जैसे for shares we have IPO, initial public offer. Similarly for funds we have new fund offer, that is NFO. That's the IPO for mutual fund. So you can only subscribe during that NFO and then you can only exit during the maturity period provided in NFO during the NFO documents. So let's understand this in bit detail. Open-ended mutual funds basically are that investor can trade anytime basis their convenience and exit whenever required at the prevailing NAV. NAV is net asset value of that mutual fund per unit wise. Closed-ended funds, as explained earlier, these are the unit capital to investment. Basically, these are predefined with the predefined maturity tenure as well. So in this, it is not possible to move in with the investment today and then exit tomorrow. If you move in, you can only move in during the NFO, that is the release of this mutual fund offer, and you can exit during the expiry date of that fund offer only. So this was a short video regarding few of the bases of classification of mutual fund. Definitely we'll cover the rest classifications in the coming series, in the coming video of the series. But till then, stay touched, stay happy and stay healthy. Yes, but do subscribe to our channel and hit the like button. Thanks.